5 facts about the U.S. Federal Deposit Insurance Corporation, FDIC. During the Depression, around 9,000 banks failed. President Roosevelt recognized that without insurance for deposits, Americans would continue to withdraw their money from banks at the slightest hint of instability, triggering even more panic. The FDIC was founded in 1933 as part of his New Deal initiatives to rebuild the U.S. economic foundation and restore public confidence. Deposits were insured up to a set amount and gave ordinary Americans the reassurance that their money was safe, even if a bank failed. Initially, deposits were insured up to $2,500, equivalent to about $50,000 today. In 2024, the amount covered by FDIC insurance is $250,000 per bank. If someone has 3 bank accounts in 3 different banks, each account with $250,000, and all 3 banks failed, FDIC would insure $750,000. However, if all 3 accounts were in the same bank, only $250,000 would be insured, and $500,000 would not be insured. Coverage can extend further if you use different ownership categories, individual accounts, joint accounts, trust accounts, within the same bank, so check with your bank. In 1933, the Glass-Steagall Act separated banking activities, preventing banks from using depositors' funds for speculative investments. The FDIC is also a regulator of the banking industry by examining banks to ensure they are sound by enforcing rules to prevent risky behavior. Its first major test came during the savings and loan crisis of the 1980s. S&Ls provided home loans had been operating under loose regulations and making risky investments. About 2,400 S&Ls failed. The FDIC insured deposits and managed the closure of the failed banks, costing taxpayers approximately $132 billion. Unfortunately, in subsequent years, rules would be loosened with the Gramm-Leach-Bliley Act, signed into law by Bill Clinton in 1999, that repealed key provisions of the Glass-Steagall Act. The repeal allowed banks, securities firms, and insurance companies to consolidate into large financial conglomerates, engaging in both commercial and investment banking under the same corporate structure. It was one of the factors that led to the 2008 global financial crisis. The FDIC insured deposits and managed the closure of over 489 failed banks. Today, the FDIC has 5,000 employees at its headquarters in Washington, D.C., and multiple regional and field offices nationwide. Its 2024 operating budget was $2.96 billion and represents 0.05% of the federal budget. If you like this video, like and subscribe. Thanks for watching.